how different is, typically it's like, well, if we print $6 trillion of money, the price of gold is going to go to the roof. We're like, oh, that makes sense. Rob, can you pull up the history of price of gold, what do you call it? The link I just sent you, right? When you pull this up, you'll notice, okay, gold prices are super high right now. Okay, where are they at? 2,300. It's still less than what it was in 1981.
Well, that's inflation adjusted.
But what I'm saying is, so
not just a
I get that, but $2,600 was in 1981 versus today. It is what it is, right? 2,400, 2,300. Okay. So, well, if we keep printing, shouldn't the non-duplicatable assets continue to grow? In my mind, gold, with all the amount of money we printed, should be at $6,000. Should be at $5,000.
Well, it will be. Now, when you go back and look at that chart, obviously in 1980, gold got overextended, right? As markets often do, right? Gold went from $35 up to 850 or so. And then it pulled back down. But it never went anywhere near the $35 where it started. And it did bottom out in 2000, 200 and change. That's when the Bank of England sold most of their gold, like right on that low, right? They got rid of a lot of their gold. But since then the gold went on a run from under 400 up to 1900 in 2011. So it had a big move. And now, it's just been going sideways for about 10 years.
So why aren't any of these things triggering it?
No, it's triggering it now. I think we're at the beginning of another sharp line up, just like that one. That's going to take the price of gold probably $10,000 to $20,000 an ounce. So you're going to see it. It's just that, it's not linear. It went sideways for a while. A lot of the inflation went into the financial markets. Why do you think the stock market went up so much in America? Inflation did that. It wasn't the real productivity of U.S. companies. It was inflation moving into the financial markets. It went into the stock market, went into the bond market, went into the real estate market. Now it's moving into the real economy, and it's moving into gold. And so you're going to see a much bigger move in the price of gold.
Rob, can you pull up the so actually, if you can do me a favor, put that right next to, I don't know, put S&P 500, okay? Put history of S&P 500, and let's see what right there. If you can click on that and click on something that shows you right there, the Investopedia, and let's look at how S&P 500 has done return. Maybe this is just telling you a history, like what it's about. Go back and put return in the title. Okay, so then go to history right there. Well, it shows like in a chart what it looks like. No, it shows it like that. Maybe go to price of Bitcoin, history of price of Bitcoin.
What does that have to do with anything?
The reason why I'm showing you this is, again, and you got to realize, we just did American Hartford Gold sponsorship. So it's not like you're in an environment where, right there. So what's that? Is that Bitcoin? 2010, 9 cents. Okay.
Yeah.
Then it goes to $26.90, $123. 1238 in 2014, drops down to $50. Then it goes to $350, $900. Then it goes to $20,000. That's what, December of 2018. Okay. Drops to $10K, goes up to $69, drops to $18K, goes back up to $74. If you compare it now, go to 2010 with gold. Go to 2010 with gold, and 2010 with gold. So it was 1678 to what? 2300. Even if you look at this with the stock market and gold and Bitcoin, it's getting hammered against other things. Why is the gold is?
Well, gold isn't getting hammered. In fact, if you compare gold, I know to the Dow, probably the S&P too, but since the year 2000, right, over the last 24 years, gold is beating the S&P.
But that's an unfair comparison, though.
Well, it's just this millennium, this century. But over the last 2.5 years, gold has been beating Bitcoin. Bitcoin is down over 20% in the last 2.5 years relative to gold. In fact, Bitcoin, even though it made a new high in dollars in the aftermath of these the ETFs, it didn't make a new high in terms of gold. And so Bitcoin has already started and has been in a bear market in gold for 2.5 years. And so we'll see. But I think Bitcoin is just,
Rob,
tulips
pull this
2.0.
up. Forget about Bitcoin then. Go to
Everybody should forget about Bitcoin.
Go to average price of a home in America in 1981. Because this is when gold was at 2,600.
No, in 1981.
Yeah, that's when it was.
No, that's when gold got to about 800 was the peak in 1981. 800.
No, that chart right there showed 2,600. So, okay, let's.
I don't know, what is this? Is this like inflation adjusted in today's dollars?
Go back to the chart with gold, Rob. So what is this? Is this go to 81?
Yeah, they must be putting it in today's dollars to adjust for inflation. That wasn't the nominal price.
So do gold nominal price 1981. Gold nominal price 1981. Gold prices. Okay, let's look at that right there.
Well, that can't be a chart of gold. That's not gold.
Okay, Rob, go to 1981 home prices.
Oh, that was just the year 1981. That was the chart, 1 year chart. Just go long-term gold chart, like long-term historic gold chart. You'll see it.
Long-term gold chart. Is that good? Go to that one right there. Go to the second one. Let's see what the second one looks like.
Yeah, there you go.
Okay, so go to 80.
Well, you got to get more years. Go down to the bottom
and increase the 10
make
years.
Make it like all time or 30. You have to make it a long.
What is that? All data?
There's it. 1980. That little spike right there.
Go to 81 as well.
That's right there. 800.
Okay, 800.
Like I said.
Okay, so let's go from 800.
Look at that chart. But that's not really a chart of gold going up. That's a chart of the dollar going down. When the Federal Reserve was created in 1913, the price of gold was $20 an ounce. Now it's moved up over 100-fold, from 20 to 2,300. That means the U.S. dollar has lost better than 99%.
I don't disagree.
Of its value.
Yeah.
But let me point this out: the price of gold was $20 an ounce in 1800, and so 113 years later, when they started the Federal Reserve, the dollar was still $20. The price had remained the same, so the dollar had preserved its value from the birth of the Republic until the creation of the Federal Reserve. It was the money printing that destroyed the value of the dollar.
But Peter, this is what I'm trying to find out. Okay, yeah. This is good, and I need your help to understand this better. Average price of home, 1981. Rob, just Google 68,900. Okay, what is the average price of home today?
Oh, I don't know, 400 grand.
Okay, average price of home in 2024. 2024. Let's see what comes up. $400,000.
That was right. It was a good guess.
So, yeah, very good guess.
But how much was it back then?
$69,000 to $400,000.
No. How much was it in the beginning? You said
$69,000.
69. And what year?
81.
Oh, okay, 81. So, all right. So 60, and that was when gold was at the peak.
800.
So divided by 800, that was 8.6 ounces of gold. So actually, houses were pretty cheap because it was 81,000. No, 81,000 divided by 800 is like 100 ounces of gold. Excuse me. So today, if you take 100 times 2350, that's 235,000. So yeah, right now
it's down by $160,000.
Houses are cheaper today because gold was at an extreme price point there. But yeah, houses are a little bit less expensive. But that in gold they're less expensive.
Again, the point I'm trying to make is when it comes down to finances and dollars. Everybody could be...
No, they're more expensive. Excuse me, they're more because it takes, what did I say? It's 400,000.
It'd be around
400,000 divided by 2350. You need 170 ounces of gold to buy a house, whereas in 1980, it was only 100. So
that's actually very easy.
Houses have gone up. But one of the reasons that the houses have gone up is because the government has subsidized them with artificially low interest rates. But also, the houses they make today are, the average house probably got more square feet, probably has more bathrooms.
I agree. But why isn't the price of gold catching up to stock market, to houses, to Bitcoin? It's getting crushed on every single measurable thing we can look at.
It's not crushed if you just go back to 2000. It's been beating a lot of those assets. But it's now starting to accelerate. It just broke out. So we can have this discussion a year from now, and maybe gold is $5,000 an ounce or higher, and then it won't be getting crushed, right? Because gold is going to catch up and move to where it needs to be. The reason gold has been underpriced for so long is people don't perceive the nature of this problem. They think everything is okay. And so it's mispriced. So there are a lot of assets that get mispriced, right? Because as Warren Buffett said, in the short run, it's a voting machine.
Okay, so here's what
in the
I got
long
for you
run,
here.
it's a weighing machine.